Hello and welcome to another update video about the DXY. The DXY has been moving sideways for a long time now, specifically since the beginning of last year, and hasn't really given us any clear indication of where it wants to go. For me, the downside scenario is still slightly preferred, even though we pushed quite high into resistance. Couldn't maintain above resistance, however. So let me take you through the preferred count and also the bullish alternative, at least short-term bullish alternative. Which again, if that's playing out, it would be the first indication that possibly overall something more bullish is playing out, but I would still be in favor of overall downside as per the yellow C wave to the downside, which would then unfold here. So we have an ABC in wave B, and then from there, a larger C wave to the downside should unfold. At the moment though, I'm tracking primarily the white count, so we should look at that first. On the white count, or in the white scenario, we have a, in my opinion, fairly clear flat structure. So we have an A wave down, okay, then this here is a B wave up, and then so not a flat, it's actually an A, B, but the B is a flat, and then it would be a C wave down. Now, AB looks clear. What also looks clear is a fairly nice 5-wave move down into the December 23 lows, and then a fairly clear 3-wave move up in wave 2. So we have 5 down in 1 of C. We have 3 up in 2. Okay, and actually, ideally, I'd like to see a 3rd wave down. However, it hasn't given me anything clear to really say that this wave 2 is over. Okay, so that we've topped. That's not very clear yet. Also, the extent of that wave 2 was quite substantial, so quite a strong extension, pushed slightly above standard resistance. That doesn't invalidate it, but it just means just be a bit on the side of caution, because it could morph into something different, because that wave 2 is quite strong. But then given the microstructure, it's okay, because I think we talked about that before. We have an A wave up, B wave down, okay, and it really only reached just below the 100% extension, which is a key target for a wave C in a wave 2. So yeah, standard resistance based on what a wave 2 should do, we broke slightly above, but the A wave was very long, pushed to the 61.8 retracement. That's quite high for an A wave. Normally we don't want an A wave above the 50% fib level. So it was the first indication that the C wave could push a little bit above resistance. But again, the invalidation point of a 1-2 setup to the downside, which would favor further downside, is this swing high. I mean, that's black and white, a break above $107.35, which is the October high. So that would be the invalidation point for the downside setup. 3 waves up indicate downside continuation. 5 waves down indicate downside continuation. Now that's all a bit subjective, of course. The fib levels are more objective. And we are still holding the standard resistance, okay? Even though we had a brief break above it, but it was not a sustained break. So therefore, I cannot clearly lean towards an upside breakout yet. And due to the 5-wave move down, I'd be leaning towards downside, even though we're now pushed against the limits. It will be black and white, and crystal clear, and there's no way around it if we break above $107.35. So looking at the micro then, if we go to the 4-hour chart, you can see it here, that this move down could be a small 5-wave move, could be. This leg up looks corrective, but it remains to be seen. What I said in previous videos is that I really want a break. I really want a break below the April 24 low for it to become more clearly the beginning of the 3rd wave down. Because we need to take out a previous swing low. We haven't really done that. And then as we go lower, a break below the B wave will be a stronger confirmation that the 3rd wave down has started. So that remains to be seen. That's what we need to look for next week. I can tell you that immediate downside pressure remains high against this swing high at 105.88. A break above 105.88 would be first evidence that we are pushing higher. And then we will test $106.50. And what's the next level above 106.50? It's not yet the invalidation point. Let me bring that onto the chart. It's the 100% extension level that so far hasn't been reached. That's still below the invalidation point. $106.80 is the next resistance then. Now above that level, I think we're looking at the yellow count, which would be the alternative, which is an extension of that B wave. I would then have to assume despite a 5-wave move down and a 3-wave move up, the market decided to push higher. Now I have to say we don't have a 3-wave top yet. Okay, so it's not clearly topped, but it looks corrective. So again, that's why I'm still leaning slightly towards the white count to the downside. That was the wind. But it could obviously be, if we don't see that topping confirmation, and we haven't got that yet, then the C wave in yellow could push a bit higher, then towards $108.32 next. Yeah, that's my update about the DXY. Hope you enjoyed the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.